Hey, what's going on? Boomer Assassins, welcome to the stream. We're just getting started. Hey guys, welcome. Just getting started, giving people some time to filter on in. Well, looky there, Jay Powell really knows how to pick up a market, doesn't he?
Yo, yo, yo.
What's up, Mr. Boulay?
What up? Ooh, we're ripping too as soon as we moved over.
Yep, I see that.
Come on, baby.
I missed the run. I'm gonna stay out of the SPY. There's a lot of bearishness on the flow that makes me nervous. I'm just gonna go ahead and hang out here.
Yeah, sit back and just enjoy the show. I was looking for this volatility earlier. I was like, just show me something. Fuck.
Right. We'll go ahead and give ourselves a really nice peaceful end to the day with a good run in our stocks. And just chill. We've had a stressful week.
And it's barely Wednesday.
Barely Wednesday. Let's go see what we've got going on. There's a lot of things happening here. Senseonics has still got me upset. I just can't even look at it right now. I'm just so mad. Not at the company, just at what they've done to her. Oh man, that doesn't make any sense.
No pun intended.
But
quick question, Drew.
Yeah, go for it.
Are you going to screen share on Discord too, based on delay over to YouTube for the viewers over here?
Yeah, I'll see if I can go ahead and get that going. I'm kind of thinking that it's easier on my PC to just screen share to YouTube. Besides, it's good it makes YouTube's algorithm happy as well. So if this becomes a problem and the stream starts to like degrade at all, then I'll probably cut the Discord stream and just stream to YouTube. So y'all can, go ahead and watch it there. And I'm sorry for the delay and stuff, but
No problem.
Yeah. I've been debating with myself whether it's easier to stream to one place or not. It seems like Cat has a great internet connection. It must be because just his data provider doesn't hate him. I don't get very good service down here on the fourth circle of hell.
Yeah, he actually does have a good connection. It's just yesterday his shit was funky, but I think it was Discord.
Yep, not enough video to maintain smooth streaming. I'm already degrading. All right, I'm gonna have to lose the Discord stream. Sorry, guys.
No problem.
It's all good, brother.
If you guys want to just watch in YouTube, you can listen to my voice here. It's just the video will lag a little bit. If I stick to this, though, it'll probably give us a better experience overall. So we'll just try to stick with this, okay? I'll even try to kill some of my unlimited browser tabs as well. Maybe that'll help. Got just too much stuff going on, man. PROG stressing you out? Man, don't worry about it. Let's take a look at PROG, okay? So I've got it sitting right here. It's sitting pretty. All right, we've got ascending levels of support. and it's continuously grown. I've got this as array right here. But you see it bouncing 1, 2, 3, 4, 5. We're going for 6, okay? We're just going to keep on bouncing off of this ascending level of support. I got to fix the trend line, but it's still there, okay? So let's not panic too much. This is actually forming a nice cup and handle here. So what we are looking to do is make another move to the upside to about. I'm gonna go ahead and be bold here and say that we're gonna challenge 240, which is a previous level of support for us that we later broke down below in December and January. So if we retest that level, I'm thinking that we'll probably have to test it 2 or 3 times before we make a move. But Progenity finally released publicly the news from its Belgian conference, so we got some DD to go and look at there. Progenity itself, like the company's got nothing wrong with it. They're still they're still just waiting on clinical data for their Precludia product and for preclinical trials to complete on their DDS and OBDS. So like if you got shares, man, like why stress? Why worry about it? Sens is another matter entirely. Scrap Queen. I'm thoroughly pissed about Sensionics. Um, this rug pull here was pure manipulation, and I'm so mad about it. There was nothing wrong with their revenue declaration that they made when they announced their FDA approval. Should they have issued both of those statements simultaneously? Um, I don't know. Maybe not, but I didn't see anything wrong with that. Like the FDA approval itself was extremely bullish. That's what's been waited on for the last year. It's been a year overdue. It was supposed to be announced back in December of 2020. So the fact that they finally got their approval and then this rug pull happens instantly after that just tells me that somebody wanted this thing to stay under a ceiling, okay? And the reason why I wanted to cover this stream today is I really, 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 really wanted to I really wanted to cover a theory that me and the analysts have been working on, and we're going to discuss that a little bit here. Kat, take a note at 311, 31111. Take a clip. I have to pull up a Excel spreadsheet, so please pardon me. Ugh, it just murdered my spreadsheet. Give me 2 seconds, guys. I gotta get my Excel up. Okay. Dr. Verde, do you have that Excel spreadsheet we were working on, looking at the IWM stocks breakdown? Is that still in?
Let me check.
Thanks,
Because I
homie.
didn't manage to grab Flabber to do the left outer join, so I only have the.
Oh, I thought
Sorry.
that Dave got that for you.
No, that was just I think was just the what I already had, the ticker and the market cap, basically.
Ticker and market cap. Okay. Well, let's see if we can get it figured out. If you can let me know, just like reply to that message in wherever and tag me on it so that I can go find that Excel spreadsheet really quickly. I am still looking for it. I'll try to pull it up over here. Meanwhile, y'all can watch the magic happen. We won't look at Sensionics for right now. We'll come back to that. Let's just go ahead and track the SPY because that's the one fun thing happening at the moment. Of course, AMC is also fun. I mean, hell, we broke $20 today. That was nice. I think we went all the way up to 2060. So, man, that was nice. I scalped a few calls. Managed to squeak out about $400 in profit. So that was a nice little bit of a cash sum. I got some spare powder just sitting in my account now. But I really am more excited about DKNG, honestly. So DKNG is a little bit sold, a little bit oversold at the moment. We just came out of the weekend from Super Bowl Sunday, and there was a ton of sports betting going on in that period. But that Friday, man, the Friday before we went into the weekend, the bullish flow was nuts. There was millions of dollars flowing into calls on the buy side, on the ask side, um, for DKNG, all the way up to like $28 and $30 strikes. So we did some analysis on our end, and we were watching what DKNG has been doing, and we went and took some bets of our own. Okay, we're not sports bettors here, but we do our fair share of gambling. So let's go take a look at what DKNG has for us. DKNG has, what is this compared? What am I comparing this to? Doge? I don't need you. Get out of here. Okay. So DKNG, long selling channel. Okay, this is a big bull channel, or bull flag, however you like to call it. This has been in a downtrend since $65, and it's tested the outer limits of it 1, 2, 3 times before it broke out and went straight into consolidation. Very good sign. This is exactly what we want. So if we're looking at this as a wedge, DKNG is showing a hell of a wedge here, and it's coming into completion now. So because the consolidation is so narrow, that gives us a very narrow wedge. That means that a breakout is imminent, and their earnings are Friday morning. Hallelujah. Somebody knows something with DKNG, but we don't know what. For whatever reason, there was millions of dollars being placed in bets for bullish calls between $25 strike all the way up to $30 strike. I played it in the middle at 28 because there was an alert on unusual whales, and all of those calls, all of them, expired this Friday. I don't know what is so significant about this particular earnings call, but somebody is making some huge bets. And because the time frame on those bets is so close together, and because they were all single leg strategies that we could see, it's just, I don't know. We have a feeling. We have a feeling. So DKNG, we're watching for a breakout above $24. If we see that breakout here, we are going to be putting out an alert. Let's go ahead and add this alert here. Go ahead and build this up for the Discord. It's been a while since I did these alerts. Okay. Call that good. So that'll just let our professionals know here on the Discord and myself know if we're doing anything significant. If we start breaking out, that'll be a nice alert for us. We are expecting something to be coming soon. Like, it has to be soon. If there's going to be a move here, like, I did follow a lot of those calls, and I don't recommend that. Like, this is not financial advice. Nothing that we say here on these streams is financial advice. We're just here for entertainment and for educational purposes. But when we see a huge amount of bullish volume coming into calls that are expiring on Friday, and normally, I should actually pull up unusual whales so that we can actually like break this down for everybody and see what we mean. Let me pull up my Chrome. Chrome. So unusual whales. Okay, beautiful. So we did get that. Thank you, Verde. We'll go ahead and check that out here in a minute before we end the day.
Do you want anything in particular that I should start prepare, or just the same kind of visualization I was sending you last night?
No, that's totally fine what we got there. I want to, I think I want to break it up into, what the hell? It's a little bit, okay, it's not quite the data that I was expecting. I was expecting price and also for the, Oh, I see. I see what Dave did. Okay. No, this isn't. This is unfortunately not what I need. But if you could merge the market cap fields and the float into the other CSV that we had, that
Yep.
and
Gotcha.
make sure that it's all ticker ordered, um, and send that back to me in the same channel, and we'll go over that
Yep.
on the stream before we hit the closing bell. Thank you so much.
No worries.
Right. So where were we? We're gonna go to unusual whales. By the way, guys, if you want to have some new friends here in the fourth circle of hell, please consider sending out a tweet, liking this video, and bringing people in here, because the more the merrier. We like to do our dances with more friends, as many as possible, here at Hell's Trading Floor. Unusual whales, let me in. Unusual whales, let me in. Sorry for the delay here, guys. I'm still trying to get into unusual whales. Why does it say my password's wrong? I know it's not. Whatever. Okay. Let's go over to great. We got unusual whales, and I'll just preemptively pull up Vortex here because I know I'm going to need that too. And there we go. Okay, so unusual whales. What we want to check is the flow on DKNG. Right now, in most recent, it's been pretty bearish. That could be a bad sign, but what we saw on Friday is a very different story. So I'm just going to kind of go through the rationale that we had going into the Friday close and why we took such a big bullish bet on DKNG. So for right now, we're just looking at $10,000 premium. That's the total amount spent in premium on options, on the options trade for DKNG, which is what we're filtering by. We're going to go to up to 15 days to expiration. Really, it's less than 7 days to expiration, but we'll just go ahead and take a look at everything. Actually, no, there's just too much fluff in there. Want to take a look at 7 days to expiration, premium of $10,000 or greater, and wow, there's just so many puts that got added in the last hour. What in the heck? All right. I need to go back to the time frame that we were looking at so that I actually am showing what it is that we were paying attention to. There we go. Okay. So this was the flow that we were seeing on DKNG just hours before the closing bell on previous Friday. The amount of premium that came into the stock on the mid side was pretty significant. But when we go to 50,000 and above, you just see how it becomes overwhelmingly bullish. The amount of calls here were mostly for in the money at 20, but there was all of these which were greater than open interest. So these were buy to close, or I'm sorry, buy to open orders that were apparently part of a multi-leg strategy. the main thing that we're focused on here is these $20 calls. There's some expected moves here if we're reading this correctly, and the premiums collectively amount into the millions. And this was the biggest amount of flow that we saw in DKNG in a long time. If we look at the charts, you can see just how overwhelming the whale volume is, and this is just premium from $50,000 and above. So this is what we were looking at, and what was most significant to us was that all of this was expiring the next Friday, or this Friday now that we're approaching here, and that is earnings day. They're announcing a big earnings play. What I kind of expected to happen was for there to be some big successful outcome with the Super Bowl. And also going into March Madness, March Madness is huge for DKNG with them being a fantasy sports betting company. So heading into March, there's some expectation that they're going to have a lot more volume, and the sports season has been gone particularly well. It's been very exciting, or so I hear. I'm not personally into sports, but the volume here in the stock market, particularly the options market, reflects some kind of excitement for something. So there's a lot of money pouring into this just out of nowhere, and with there being just so many of them with these huge bullish bets just out of the ether, I don't know. It has my attention, okay? And DKNG is tremendously oversold. Let's take a look at the Ortex data. And we will see that DKNG has a short interest of 12.5%, which is actually pretty impressive. The cost to borrow is not very high right now. Utilization is still pretty low, but still, with this being more than 12% of their float, that's a huge number. So let's look at Ortex's estimated. It's been pretty close to the exchange, and as you can see, Ortex, we actually got off of a call last night with them after they had added these really, really nice new additions to their chart. I like seeing this range that kind of gives you a confidence level of what their estimate is. So I'm really liking the new UI changes. By the way, if you want access to Ortex and you're looking for a nice discount, we actually have an affiliate link with Discord, or within our Discord, or you can check out the description of this video and look at our affiliate link with Ortex. Go ahead and follow that link, and if you set up a trial account with them and then sign up for an annual account, that and then send an email to support@ortex.com with the subject Hell's Trading, they will give you a 10% discount on your entire year of service. And this is an excellent analytics tool. It's not just short data. They have news on fundamentals, events, analytics, the options data, dividends data, insider sales and purchases, and also the trading signals, which is these have been actually a lot of fun. Seeing all these trading signals coming through on different stocks. You can look at it on an individual level, or you can look at it across the entire market. But anyway, back onto our train of thought here, looking at the shorts. DKNG has been rising in the number of shorts ever since they came down off of their all-time highs. Here it's $73. Let's see, it's a high of 74.38, but you get my point. Ever since that point, we've been rising steadily, with short interest percentage of float going from 5.5% all the way up to 12.5%. So more than doubling the number of shorts to date. And with the failures to deliver, I'm also actually quite surprised this hasn't caught the attention of retail overall, because 1.65 million failures to deliver is actually that's quite significant. I believe that the rule still holds true that if more than 0.5% of a company's total float is failed to deliver for more than 5 consecutive trading days, then it immediately goes on to the threshold security list. And we've had this bulk of days here recently where the failures to deliver have exceeded 500,000. So I'm just going to do a little bit of quick math here to figure out how much it is that how much their float actually is. Actually, a better idea would be to just use our handy dandy stock bot. Then I don't have to do any math at all. Okay, so the float is 376 million. Go ahead and multiply that by 0.005, and we get 1.88 million. So if the failures to deliver exceed, wait a second, did I read that right? Yeah, 1,880,000. So if the failures to deliver on DKNG double this current value, then it would be eligible for the threshold security list. And for a stock that's trading with a float and market cap the size of DKNG, that would actually be kind of a that would be quite a market event. So I'm curious to see what comes out of this here, because DKNG has been bet against pretty strongly by the security or by the short security lending volume, just based on the ramp up of volume here over the last several years. Whoa, chart, calm down. The security lending volume is like never less than 5% of their total float on a given day. It's kind of excessive. And I know that this can be the result of market makers just fulfilling trades, but like it still really doesn't explain that being more than 60% of their total trading volume overall. That seems really bizarre and excessive. Let's go ahead and head back over to the charts. So like I said, DKNG are what we're watching for is for it to make a break above $24, $24. And if we do see that, then we are hoping for a nice advance in the price and maybe a little bit of a reversal of its trend, because right now this long descending channel has, well, it's been rough to watch for a long time, and it's going on for 2 quarters now. So I think it's a little overdue. Let's go review the SPY. SPY is still pushing 44.7 and 20 cents almost. Let's review some of our additional plays. BKKT doing excellent. BKKT is still on trend with its rising support, and you can see that it's respecting the fib levels. As soon as it broke above, it got rejected and then has been bouncing off of this fib level here at around $8.20. So now that we've cracked above it and we've established this as a area of support, our next leg is basically to see if we're going to run between now and April all the way back up to $17. Isn't that a beautiful thing to see? So we'll have to see, but we are kind of looking for. We've already got this cup and handle that's set up here, and the handle has started to move. Now our big expectation is for the handle to complete all the way up to here. How that will look is going to depend on how we move along the time frame. But with if previous moves in BKKT are any indication, we can look at the OBV to kind of give us a hint about that. So looking at the OBV on BKKT, notice how BKKT had the same kind of situation. It had a long sell-off going down here. Let's go ahead and make this a little bit clear for everybody. So BKKT had this long bull channel going down here, and it broke out. It took about a trading week for it to have just a sudden launch. Quite literally went through the roof. And the OBV shot up from a balance of, what was it? It was like less, yeah, it was negative 400,000 shares on balance. And before you start screaming manipulation, like that happens on all kinds of different stocks. The balance is relative, so the balance can't be negative when it comes to OBV. So that doesn't mean manipulation by itself. Just don't want people to be confused. But in any case, when you see the OBV suddenly shoot up through like this and then it goes into consolidation, this is actually a move that we've coined hellish divergence because we see the OBV rocket up with the price and then it consolidates rapidly. And the hint here is that there's a plateau. This is the first time that it's done it, though. So this actually was not what I would call a predictable move. But what may have been a predictable move was when it launched up from this point and the OBV continued rising as the price was consolidating. So you expect that that's ordinary bullish divergence on the OBV. So since the OBV continued to rise as the price was, doing a little waver around here, that kind of indicated this move starting here at this low, going all the way up to a high of $50. And that took a while for it to shake out. But all these launches in the OBV, just the volume surging into the stock as it continued to make moves higher and higher, that was the hint that that people should have taken, that BKKT wasn't done with its moves yet. But of course, in retrospect, we can say that seeing the whole chart pattern. But at the time, it's volatile. You don't know what it's going to do, so you can't really fault anyone for not trading that perfectly. But now that we've had this long period of selling off, and the price is basically back down below where it was trading before, and the OBV is still this high, like more. So I'd say about 75% of its initial climb when it reached this point where we crossed on the MACD. This is a MACD cross. It's really small, but trust me, it's there. This MACD cross signaled a rise, and then we started to see the bullish divergence start to come back into it again. OBV volume all coming into the stock, and all of that momentum is just continuing, okay? That volume, all of this volume, is a huge indicator of moves to come. So I'm hanging on to my BKKT calls. This one has us really excited. This one has fired two separate signals that we're testing out. We've back tested on 30 different stocks for BKKT, including BKKT's original, and this signal fired once before, I want to say about 12 to 15 days before it had its squeeze. So if this signal is true, then I feel very safe about April calls, but somebody who's a little bit riskier might try March 18th. And let's see, I have those calls set for $10, so that is my bet. The key here is patience, 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 patience. Let's go ahead and review all the chat. Yeah, Sens has been hit hard this week, I know. I don't really want to look at it. It's kind of making me upset, but I'm going to go ahead and take another, I'm going to double down on my position here pretty soon. I just have to get some of these trades to settle. I'm probably going to add to my position next week. Senseonics is way oversold. This is not a justifiable move here. This is a huge buying opportunity, just in my opinion. Like, don't take what I say as gospel, and I'm not a financial advisor, okay? So just understand that. But Senseonics this is way oversold. This is not a justifiable price for this company, even though their earnings are not as good as people wanted them to be. Like, who gives a shit? This company is being backed by Ascensia and Panasonic Healthcare Holdings. They're dumping money into Senseonics so that they can get their product out to market, and now they finally have it. Like, what the hell kind of sense does that make? Why would you short this company at the point where it's finally ready to go to market with its best product yet, and that product has no comparable competitor in the entire world of diabetic treatment or continuous glucose monitors? It just doesn't make any sense. So whoever the hell shorted Senseonics and smashed the price back down to $2, thank you so much for this free discount. And fuck you, I'm going to make you regret your decision. So all I can say is thank you for making me rich in my future, because I have more patience than you do. And whatever your motivation is for shorting Senseonics to this point, and to think that you're going to cause this company to fail, you're really deluding yourself. So if there's anybody who is listening from the other side of this trade, like, thank you so much. This is an absolutely phenomenal buying opportunity for me, and trust me, I will be taking advantage of it. Thoughts on EVGO? I could take a look at it. I don't know much about that company. EVGO. EVGO. EVGO Inc. Just, I'm gonna assume it's an EV play. This is nice. Ooh, that is nice. It's looking a lot like BKKT, honestly.
It's one of the short squeeze candidates. I think it's like 3 or 4 on Fintel's short squeeze list.
Yep. Hellish divergence. We sure do. Yeah, this is a good bet. Can I get a Scourge run on this, Dr. Verde?
I'll see what I can do.
Is the bot not running right now?
It is not. Flabber had some things going on.
Gotcha. All right. Well, I'm talking to Dave about getting that deployed to a server, so we'll be able to keep that running when Flabber's out. So, okay, no worries. If you can't get it, not a big deal. We'll cover that later on when Flabber has some time to come back on.
Yeah, sorry.
No worries. In any case, we'll be watching this for some additional squeeze signals. I have a feeling that this one's actually probably going to pop sooner rather than later. But I'm not going to go ahead and I'm not going to take any positions here just yet. What I will do is I'm going to set some alerts. Let's go ahead and let's get some of those built. So first one, I want to look at the OBV. Let's bring this all the way up. I have so many 4 panes. I want to look at a 1 pane. Okay, EVGO. Fantastic. Dude. Excellent. Okay. All right, we've already crossed. We have already crossed, so that's good. All right. My indicator is probably going to be set for this right here. This is the nearest peak, so when I see divergence in the OBV exceeding 65 million, that's perfect. We'll go ahead and set an alert on that. Want to see it crossing up. Okay. So if we see a surge in volume, as long as the price closes above its its previous day's close, then the OBV will rise, right? Because that's how OBV works. If the price closes above the previous day's close, all that volume that was added in for the day goes into the gets added to the balance. So what we're looking for is the OBV to climb above 65 million. It's currently sitting at 43 million. At the highest point in the stock's trading, it was at 79 million. So that would have been at the peak of its squeeze. The reason why we look at OBV is because OBV signals a move based on the volume rather than looking at the price. So we don't care what the price is doing as long as the price closes above and the volume is surging, then we know that there's a lot of trading and attention coming into the stock. So that's what we're looking for. We're basically trying to predict the mentality of the market, and it's looking for people who are making an opportunity or looking for an opportunity to jump into a stock that's mid-cap, small price, and low flow, that's able to make a quick bet and basically drive the price by just throwing money into it, and eventually what that leads to is FOMO. So what I look for is for the signal that a big whale is throwing their money into it and driving volume. That will inevitably catch other people's attention, but as soon as that trade comes in, I want to see it. So as soon as I see the OBV crossing above this threshold of 65 million, I'm going to go ahead and set my bets to go for like 30 to 45 days till expiration. That's just my bet when I'm taking call options, and I'll set it just a little bit out of the money. With a price like this on this stock, I'm going to take a guess and say that the options are not all that expensive, but I'll go ahead and take a look on what the price is for. Let's look at March 18th for EVGO, just to go ahead and get an example. I'm not buying these. I'm just going to look at the prices and see what they're trading at. I see that there's no April call options. That's interesting. There's no April chain. Okay, yeah, so $12 calls for March 18th are trading in the mid between the bid and the ask is at 40 cents, and it's trading in increments of 5 cents. So you could get $14 calls for 20 cents, and that's not bad for March 18th, but it's a little risky. So currently, man, this is so cheap. What are the Mays? Let's look at May 20th. Okay, so $100 a piece for $12 call contracts. So that's $1 per share, and that's a much safer bet. You're giving yourself a lot of time by doing that, but there's not a lot on the ask. There's very little liquidity in that market. So there's a lot of people that are asking for it though. So interesting. I'm going to keep a close watch on this stock. It's a good one. This is a very good one. I like to keep an eye on this. It's another squeeze candidate. We all love squeeze candidates. Wow, PayPal got smashed. What the heck happened? Oh my God. It was breaking out of out of this falling wedge, and then it just got crushed again. Oh, never mind.
It followed SPY very closely for the last few days, and when it flushed, PayPal flushed even worse.
Gotcha. All right. Well, that's actually very interesting. Thanks for the context, Verde. I think we're probably going to watch this for a reversion. If you could go ahead and put a watch on it, I'm sure you're already watching it, but look for any changes in the MACD. I see the MACD swung really hard low, so if we see the RSI coming back up above 30, you let me know.
Yeah.
Cheers.
There's a big divergence on the RSI on the hourly, actually.
Okay.
That I keep watching, but very, very small.
Well, if it's tracking the SPY and it's still this low, what's it trading at actually? We might do this for a swing trade.
110. I haven't checked the flow on it though.
Ooh.
So I would check that first.
Okay. Yeah,
because we had that alert coming in for 120, I think last week, and those really printed.
Okay.
It was that first fake breakout of the channel, retraced under it after.
Good call. All right, I'm taking a look at the flow on another screen here, so everybody just please bear with me while I go and look at that. There's a lot of puts being sold for 120 expiring on Friday. Interesting. Oh, that's interesting. All these bets are like, what do we have? What do we have above 150,000 premium? All bulls. Interesting. So a whole bunch of bullish volume came in just in the last. Oh, I'm still looking at Friday. Oh, dumbass. Excuse me, everybody. I gotta reset everything. Unusual Whales is holding on to my time frame when I was looking at DKNG. All right. Ooh, okay, I'm going to show everybody this. This is exciting. Okay, tons of puts are being sold. That's a bullish bet. All right, so everybody's looking at this. What the heck just happened? I had it here, and it was showing me all green, and then it suddenly just changed to all red. What the hell? I feel like Unusual Whales is having fun with me today. I feel like I'm losing my mind. All right. Well, at least in the last hour, PayPal's had some bullish volume in the form of puts being sold for 110, and almost all of these are being sold for within 90 days expiration just to collect that premium. So somebody's betting big that that selling puts is the way to go. There are some deep in the money puts being bought for PayPal with much closer expirations. So somebody is also betting that in the short term, PayPal is going to go down. We may look for PayPal to make a reversion. We'll keep an eye out on this one for a swing trade. Man, that's such a huge gap. That's such a huge gap to fill.
Your EVGO data is ready.
Thank you so much. Okay. That's a lot of float. That's a lot of float. Interesting. EVGO might be a candidate for a squeeze very soon. Just till March 18th. How many of those calls? Let's look at this together. So this is courtesy of our Scourge bot, which is showing the number of call options and their relative to the float. So the percentage of float in the money based on this is the percentage. So at $2 at the $10 strike, 2.6% of the float for EVGO is in the money. The reason why we look at this is because we're looking at gamma potential and keeping in mind the potential for there to be some kind of starvation in the supply. So this is part of what we analyze for squeeze is gamma squeeze potential. If we take EVGO up to the $15 strike, then 8%, or actually 7.5% of the float would be in the money. So that would be not a massive supply crisis, but it would be significant enough to push the price at least a little bit. I'm getting some requests for BBIG and PROG, so I'm going to go ahead and switch over to that. Sorry, guys, for making you wait. We'll go ahead and look at them. Okay. We'll do PROG first. Just so that nobody's confused, the big red area is part of a larger Fibonacci. This is a Fibonacci retracement that we're looking at. The upper resistance that we're looking to crack through is 240. We break through this, and I think that we've got clear skies ahead of us. So the what I'm looking at for Progenity that's a clear sign of bullishness is the repeated higher lows. So we've got 1, 2, 3, 4, 5 bounces off of this ascending level of support. If we continue on this trend just going into March, then before March 18th, we'll be trading above $2. So for me, like $2 for March or even $2 for April, that's a very sound bet. There's a good chance to make some good money there. But additionally, like the options are so cheap, and they push the price down for us. So all those premiums are like way oversold. If you actually look at leaps for Progenity, going out to like January 2023 and 24, I'm sorry. Thank you for the heads up. Thank you. I'm still looking at Unusual Whales. Sorry. Here's Progenity. So this is the Fibonacci that I was talking about. This big red field, like I said, upper ceiling at about 230. And what I'm looking at is for these supports 1, 2, 3, 4, 5 bounces off of this ascending level of support. The thing to watch is for this trend to continue on, and as long as we don't break below this at any point, then like there's no bearishness here. This is continuous bullish movement. All the pullbacks here have been very healthy, somewhat predictable. So if you're like doing day trading here, it's all a good sign. If we look at the OBV here, it's consistently stair stepping up, which is the same thing that Progenity did back in October and September. So the OBV started stair stepping up as the price started rising, and then we just had these huge pops here. These moves were a lot more aggressive because this is when retail first got into it. So the buying and the FOMO was just a huge surge into the stock. And we had this dilution event where we had the rug pulled out from under us. But as soon as that completed, we rocketed back up to where we were and beyond again. So we don't really have any dilutions ahead of us with Progenity at the moment, at least not to my knowledge. The company has secured enough funding for it to continue its operations up until 2023. So I'm, of course, I can always be wrong about that. Somehow they'll pull shares out of their couch cushions and throw it into the market at some point. You know, I'm sure it'll happen. But what we're at a certain point, it stops mattering. Because what we're really waiting for with Progenity is for them to get their preclinical trial data for their OBDS and DDS delivery systems of their drugs. If they can license that out with a partner, such as I believe they are looking at Ionic, which that's another company that's doing treatment for ulcerative colitis and Crohn's. So both of those are both of those diseases are able to apply the delivery system with certain drugs, such as adalimumab, which is Humira, or tofacitinib, which is Xeljanz by Pfizer. And either of those two drugs are excellent candidates for the OBDS and DDS drug delivery systems each. The key thing is that we have to get that preclinical trial data for Progenity, and that's going to be at a 2 to 3 month time frame before we get any real news on that, or we can expect there to be some news. On the other hand, though, they also have their preeclampsia treatments, or I'm sorry, not treatment, but a rule-out test called Precludia, which they've already got clinical data for, but they haven't released it for whatever reason. They're probably allowing their buddies more time to accumulate more shares of their company at a discount. I don't know what the motivations are for what Progenity is doing or why they're so resistant to give good news to people. It's kind of pissing me off a little bit, but I digress. We know what the company is worth. This is actually an extremely valuable company, and as long as we keep being patient and we keep holding on to our shares, like eventually the company is going to be like, honestly, like we can't just like hold this forever, and they are obligated to deliver that news within a certain deadline, and that deadline is in mid-March. So they are going to have to release the news of their preclinical data. They have already assigned a date to it, and if they don't meet that date, then they are in violation of their fiduciary duty, which is not good for the company, which is not good for their major shareholders anyway. So at some point, something has to give, and that data will be released to us, but we have to be patient. BBIG is looking really strong. We've already broken through the lower level of resistance. We established support, and then we went straight back up and challenged the resistance at 380 again. So we're bouncing off and consolidating into this area, and the OBV is doing exactly what we want it to. It surged upward and then consolidated sideways in through this sideways price action. BBIG is doing so good. I can't even begin to stress how excited I am for BBIG. The news on Cryptide is going swimmingly. Lisa King is doing an excellent job making sure that we are meeting our deadlines and keeping up with our SEC filing obligations. BBIG they are on point right now. We had some serious issues with the rug pull thanks to Ted Farnsworth and his fucking idiot team, just like throwing out all the hype and then not delivering on their obligations and throwing out all kinds of sales of warrants and stuff that they didn't have shares available in their treasury to deliver on. All of these things, like, they hurt the credibility of the company so badly. And as soon as they brought in Lisa King, like, it was an immediate turnaround. Like, there was an obvious change of sentiment. There was a huge, clear change of direction. So all of these things are going really well for the company. The critical thing here is that we need to keep in mind that it's going to take time for all of those promises to be delivered on. And what I have faith in is that Lisa King, as an executive, is very good about being timely and delivering on the obligations that, like, I swear, like, put some more women in executive roles, and they will make sure that the guys that make all these empty promises get their shit done. Because fellas, like, tell me I'm wrong, that your wives and your sweethearts don't make sure that you're getting your shit done that you promise. Am I right? So, like, Lisa King, this is a personal shout out. Thank you from the Devil's Stockbroker for actually making sure shit's getting done for the first time at BBIG, and that you're delivering on the promises. Keep doing your good stuff. Keep doing you. See, the market bell is about to close. What can we watch? Where's the excitement at? Oh, fun. Fun is just going sideways right now. I kind of wish it had a little bit more to give. BKKT is still following its ascending level of support, but it's kind of bouncing right now. Yeah, more like consolidation. Just want BKKT to hold steady. Keep doing what you're doing, though. Let's see what it does. BKKT is one that I'm going to say this. If this one is going to make a move, it's going to be sooner rather than later. I've got most of my positions set up for March 18th. So, disclaimer, once again, not a financial advisor. This is not financial advice, so be careful with this. But I'm really looking forward to seeing what comes in the next month. Ding, ding, ding. That's the bill. So before all of you guys go ahead and pass on to your next thing, before you go on to your next stream, I want to cover one last thing. This is kind of like a little bit of bonus DD that we've been talking about here on Hell's Trading Floor. That this is where we put our tinfoil hats on. We start talking about things not related to technical trading. We're actually going to focus on something that a bit of a theory that we're calling the glass ceiling theory. That may have some explanation as for why the IWM is, and all of the meme stocks that are tied to it, are just having such a hard time making their moves. And we know that so many of them are squeeze candidates. So I just want to explore some of this with you all and talk about why is it that the IWM, despite such a bullish market, has been totally flat ever since January. It doesn't make any kind of sense. So for those of you that do not know, the IWM is the Russell 2000 small and mid cap stock index. This is an ETF managed by BlackRock Inc., which contains a bucket of stocks from over 2,000 of the most promising small cap companies. Scott, I will get to you after this, and we'll take a look at BBIG's FTDs, but I'll go ahead and finish this first. Okay, so the Russell 2000 has, ever since January, or more accurately since February 2021, has hit this ceiling. Okay, we broke through it at one point in mid-November, early November, and a whole bunch of the meme stocks were running, but then we just sold off right that and straight through to Christmas, which is the most bullish month in the stock market, statistically speaking. So why is it that going into the most bullish months of the stock market in the year, why is it that the IWM showing that strength got rejected immediately and sold off since then, has never recovered? It's starting to show strength again now, but like, what happened here? And what happened every time it tried to crack through it? Because there's been multiple events where it did. Like, we had early February when AMC squeezed for a second time, along with some other stocks like BBBY, Senseonics. And then in March, AMC tried to make another run again and once again got rejected. And just so many things like lined up in May when finally like the sell-off was the worst that it was in mid-May. But then in late May, AMC started to show signs of strength going from the 18th of the 13th of May is when it turned around. And it's interesting that the IWM had its greenest day and a big reversal that same day. That's because AMC is one of the heaviest weighted stocks in the IWM. So the IWM moves a lot with these stocks, right? And that's what we consider like these stocks, this bucket of stocks that are tied to the IWM. They all kind of move together in a lot of ways. When the IWM is doing really well, it's because a lot of the stocks in the IWM are doing well. And people might be pushing individual stocks to do that, or they may just be pushing the ETF itself. And all of that has a net effect of pushing value into that bucket of stocks. And when they're shorting it, it takes value away from it because they're selling supply into the market. They're borrowing stocks and selling into the market and trying to catch profit on the way down. But there's been consistently bullish volume in the market, and the whole time that the IWM was trading in this period, like let's just go ahead and compare it to the SPY, for example. The SPY was doing fantastic. Like look at what the IWM did compared to the SPY. And yet all of the companies in the IWM were some of the highest grossing, most profitable companies in the year of 2021 because of the squeeze events that took place. They gained more steam than any other stocks in the market. Some of them outperformed the SPY by 1,000. It's ridiculous the amount of profit that came into some of these small cap companies. So why is it that the IWM suddenly just took a shit in the middle of it and it hit this, what I'm calling the glass ceiling? Well, I have a theory about it. And for that, we're going to have to explore a few other things. So I'm going to go ahead and pull up some charts. Let's see, Verde, did you post that Excel sheet somewhere?
Yeah, one sec. I'll take you back in it. It's a UTF-8
Oh, there it is. Got it.
encoded.
Got it.
So if Excel plays up, you'll have to go into data and then data to columns.
Okay.
And choose the delimiter. I think it's tab delimited.
Tab delimited? Okay. Well, I'm going to go ahead and just make it a CSV. Bear with me, everybody. We're gonna make this work. Thanks everybody for sticking with us and bearing with me as we go on this little adventure here.
One thing to bear in mind, because of the free subscription aspect of the 12 data account that they've used, we only have the float for only half of the tickers, so only 1,000.
I was having a massage.
Does not want to open that file cleanly.
Let me see if I can output it as a CSV for you.
If I was on my Linux machine, I could make this work, but it's currently not running. And that'll take me a while to spin it up again. Sorry, everybody. I was hoping this would be a little bit easier. UTF-8 tab delimited.
Do you have a preference of what type of encoding? Do you just want the normal CSV, comma separated?
Yeah, UTF-8 comma separated is fine.
I am copying anything else in the world. And what have you sort of like build up your tolerance from having chicks from a baby?
You can go ahead and you're hot micing a bit, Verde.
Sorry.
It's okay. There we go.
There you go.
Okay, that I think that'll work. Let's look at that. There we go. Okay, there we go. I'm signed into my account.
Yeah, so one thing to bear in mind, as I said, because 12 data on the free account only gives like half of the tickers, the float for half of the tickers, which still I think should paint a pretty good picture.
Gotcha. Okay, so everybody, we're going to go ahead and look through this, and we're going to cover the glass ceiling theory. Give me just a moment longer to go and get my Excel added to this. Excellent. Okay. So what we're looking at here is a list of all the stocks that are included in the IWM. That's the Russell 2000. This small cap ETF, a bucket of 2,000 of the most promising small cap companies, is balanced and weighted based on the number of shares versus their trading price, and it's managed by BlackRock Inc. This is one of the largest, or if not the largest, hedge fund in America. This particular ETF contains several major companies, several of which you will probably recognize. If we sort by the number of shares, you'll see that most of the ETF is made up of U.S. cash, which is basically its collateral, backed by more than $123 million, and some Treasury bonds. And that's what this is. If we look down here to AMC, you'll see that AMC is the fourth heaviest stock by weight in terms of the number of shares, because this ETF happens to contain almost 12 million shares of AMC in it. And because of that, their weight is extremely heavy. The weight of the stock is basically the shares multiplied by the share price, and by that token, you can see that AMC is by far the heaviest. So let's sort by weight. You see that AMC is, actually not the heaviest, excuse me. The heaviest is OVV, that's Avintiv Inc. Their share price is $41, and there's a little bit less than 60 million, or a little less than 6 million, excuse me. AMC being the second heaviest stock based on its share price of $17.75. It may actually now be exceeding or threatening to exceed Ovintiv, because the share price changes every day, and this data isn't updated regularly. But the interesting thing about oh man, we're missing the float for it. That's sad. All right. Well, we'll work with it anyway. The shares of AMC that have been purchased by this ETF give AMC's price a huge influence over the IWM. And it's the same case with all of these other stocks. So if we actually were to look at this by the list of shares that have the most, the stock tickers that have the highest number of shares in the IWM, we'll see that there's quite a few of these that actually have an extremely significant amount of shares, but are trading at an exceedingly low price. And just to take an example, let's look at Tonix Pharmaceuticals Holding Corp. This is a healthcare company with a market cap of $1.89 million. They have almost 10 million, or 9.55 million shares, and it's trading at 20 cents. Let's actually explore this company and see what its share price looks like as compared to the IWM. So TNXP, Tonix Pharmaceuticals Holding Corp. And if we compare this company to the IWM and take away the SPY because we don't need that anymore, we'll see that the IWM was lifting along with this company when it made a run up to more than 210% of its value on the 11th of February. The IWM lifted significantly in this very short period of time. Let's look at that. So look at that. The IWM had a, let's actually scale this out so we can be perfectly precise. If we go from the valley to the peak, the IWM had a 10.68% increase in its value in just 10 days. This stock in particular had an increase of 120% in the same time period. And that's interesting. So the stock moving in this in just this short period of time was able to, in theory, help push the value of the IWM because it had such a significant run and because it had so many shares in its in the IWM. So taking away the IWM, now that we've actually seen that side by side, let's look at what the price actually did. So the price actually only moved from 0.94, that's 94 cents, all the way up to a peak of $2.12. That's a significant move for this stock because it's actually a low float. It's a healthcare company. They're actually quite new into biotech, and they just, there's a lot of shares in the IWM. So when this stock moves by 100%, you're talking about like $1. The whole share price moving by $1 has a profound effect on the value that it delivers to the IWM. And if you notice, we kind of see some hellish divergence in this one as well. Isn't that interesting? So the stock trading down from these peaks, as we explore this, we notice that the stock sold off massively from its IPO. Okay, it was shorted into the dirt, and there was a lot of dilution that went along with it. I looked into this company just a little bit. It was a newcomer to the stock market. They needed funding. Okay, and then with it being healthcare and biotech, they dilute. Okay, it's just how they live. But after that happened, the OBV started to create these plateaus, which we are very familiar with looking at stocks like GameStop and AMC. And as we see these things happening again, more and more shares get bought up and then it consolidates. And isn't that interesting how when this stock gets moving, it gets slammed too? This is not a meme stock. This isn't one that people have been paying attention to. And it's not the only one that I can actually cite that's part of the IWM. And I have a theory about the peaks and the valleys of the IWM, it being tied to these small cap micro float stocks. And the reason why we haven't squeezed yet is because when these things get moving, somebody has something to lose. Okay. And if we know anything about this market, then whoever has something to lose whenever certain small cap stocks are doing well, whenever retail is doing well, it's probably market makers and broker banks. So Tonix Pharmaceuticals sold off from $2 at the maximum, and that's now sitting down at a resting price of 20 cents. I don't know enough about this company to tell you whether it's actually a good investment or whether the company is actually doing anything valuable. I don't even know what their product is. I don't know anything about them. But what I do know is that when their price moves up, the IWM moves up too. And it's the same thing that's true of AMC. When AMC moves up, the IWM moves up as well. But when the IWM moves up, everything moves up. And that's the thing. When these stocks move, they move together because they're tied to the same ETF buckets. they're tied together because they're part of similar sectors and they're part of similar, shall we say, classes of stocks, because there's small cap, micro cap, mid cap, large cap. And we have these different market cap capitalization of stocks all thrown into these buckets. But when we have one in particular that's part of just a small number of sectors, like the IWM consisting of retail, healthcare, technology, and a few others, if any one of these sectors starts to do really well, and it especially does well on the mid and small cap stocks, then the IWM will perform, and it will pull other things up with it. So it's interesting to me that every time something like this happens, where the stock just gets a ton of attention and people are loving it, it gets its price, it gets moving, and then out of nowhere, just slams the price down and it sells off from there and it never recovers. And interestingly enough, there's so many bag holders, because that's what this OBV tells us. We see so many buyers coming into the stock, and then all of a sudden there's just nothing. And the sell-off, it doesn't matter how bad it gets, there's still people holding on to it. I find that particularly interesting. Let's go ahead and take a look at another one. Going back to the Excel sheet. Let's take a look at another one, GSAT, Global Star Voting. Just a random one. I haven't looked at this company at all. Let's just take a look at it. How about that? Isn't that fucking interesting? The OBV, every time it's squeezed, the OBV goes flat and the price sells off. But this continuation, this bounce and rebounce, or bound and rebound, going up and up higher towards its previous resistance before it finally sells off. And what a coincidence that this also matches up with another peak in the IWM. And I know this because I was paying attention to the stock prices at that time. Let's also compare the IWM once again. Another peak in the IWM. GSAT squeezed, and I'm going to have to change the comparison so it's a little more evident. New price scale. Another peak in the IWM. This thing hit a bottom, and then all of a sudden this stock moved, and look at the difference. Look at the difference. All of these stocks are tied together at the hip because of this ETF. And the thing is that if there's somebody who is short on a significant number of these stocks, if they bet that a ton of these different stocks were going to fail, they're taking a bet that they're going to fall out of this ETF. But in the meanwhile, while this stock that they are so heavily short on is tied to that ETF, they also must understand and respect the fact that if that ETF is doing well, then this stock may also do well by proxy. And that's just the nature of how ETFs work. Let's go take a look at another one, because now I'm starting to have a little bit of fun with this. Oh, sorry, I just realized that I didn't switch the screen. Okay, now you can see it. Okay, I apologize. Sorry about that, guys. Sorry. Don't hate me. So IWM, as soon as this thing got moving, we see jumps and jump and jump and jump in price on the IWM every single time. When the IWM moves, stocks like this start to move too. And some of these moves lead to the IWM moving as well, because there's a ton of shares. GSAT is actually, I believe it's the second or the third heaviest weight by shares in the IWM. So imagine if a stock like GSAT were to move from $1 to $2, it could immediately cause a run on IWM, lifting other stocks at the same time. And I don't think that somebody who's naked short billions and billions and billions of shares that they would have to cover on other stocks tied to the IWM would ever want to allow that to happen. I'm going to go back to Excel, and we're going to pick another one because we're having some fun now. Let's go take a look at another one. Here we go. TXMD, Therapeutics MD Incorporated, with a market cap of 2 million and 8.6 million shares. So TXMD. TXMD. Here's one who's just been moving into the negative nonstop. This is actually a company that may be due for a reversal. Notice the volatility getting lower and lower and lower and lower, but the volume is spiking here as the price is moving lower and lower. This is starting to tell us some very interesting things here. So let's actually look on the long term. Therapeutics MD going all the way back to 2016 never exceeded $11.25. Let's just draw a trend here for the giggles to the peaks and valleys. I'm going to go ahead and bring this down just a little bit. So the orange line that you see here, this is the overall IWM performance on its own price scale. The IWM price compared to Therapeutics MD or TXMD is over here. IWM 206 today. Therapeutics MD is currently 83 cents. So this is a stock that has yet to have its squeeze. And why do I say it hasn't had its squeeze yet? Well, I'm just kind of spitballing here, but something tells me that this stock is shorted into the dirt. So let's go and explore the idea. Go ahead and pull up my Ortex chart. TXMD. .76% shorted, with the total amount going up to $22 million, or 22 million shares, excuse me. It's not as shorted as I was expecting it to be, but I just find it interesting, all of the lineups between the different stock prices with the IWM, and the fact that IWM, every time that it has tried to challenge that ceiling, that $230 share price for IWM, something always gets crushed. And when IWM gets crushed, AMC gets crushed, Senseonics gets crushed, and everything else that's tied to it also gets crushed. So TXMD is one that I've noticed hasn't had its major move yet. So I'm going to be looking into this company to find out if it's actually a worthy investment. But I also happen to notice that a significant amount of failures to deliver are sitting on this one. So I'm curious. That's all I'm going to say. I'm just curious. Let's go and look at one that we know is heavily shorted, that being Senseonics. Senseonics has a short interest of 25% with 81 million shares currently shorted against it. The failures to deliver, not terribly significant, at least not recently. Sure as hell was back in July. The utilization maxed out at 100, of course, because what else would it be? Cobble, we might take a look at that one a little bit later, but I still want to continue down on this train of thought. Go back to TradingView. So let's look at Senseonics relative to the IWM. Ooh, isn't that interesting? Spike, 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 spike. See, Senseonics is also part of the IWM. And by weight, Senseonics is actually the 8th heaviest stock in terms of the number of shares that are attached to the IWM. As a matter of fact, if Senseonics back in January had moved past had made its move past $5 and stayed there, then it would have actually outweighed AMC in the price when it squeezed to 20, because at that time AMC wasn't so heavily weighted. Senseonics has been in the Russell 2000 for quite a long time, and AMC got added to the Russell 2000 when it was upgraded. The thing about Senseonics is that this one is a little bit more blatant and obvious to me, because with the FDA approval, I feel like it should have been a home run, right? And I have certain feelings about that, and you might call me jaded, but I also see these repeated spikes in Senseonics price that coincide with these huge moves in the IWM, and they also coincide with big news that hit on Senseonics. And all of this news was incredibly bullish. Like their promise study back in June, um, and all of their clinical data being released in September, and then news that they were getting ready to. They were being told by the FDA that their approval was coming soon, and all these sell-offs in between, with the IWM getting crushed between all of the other things happening in the market, and Senseonics also being punished repeatedly. There just seems to me to be a lot of coincidences. So now Senseonics chart looks a lot like AMC's did. And now that it's sold off below this support line, I'm sure everybody else is thinking the same thing. Oh God, Senseonics is a dead cat. But I don't, because Senseonics is a very valuable company with a life-changing product that they finally got an FDA approval for, so that they can start selling into the United States, which is like, let's just face it, it's the biggest market for diabetics. Okay, we're not the healthiest people when it comes to like type 2 diabetes, but we also have a huge number of insured type 1 diabetics here, which is what this product is for. But if this product can be proven, then it will be not only applied to type 2 diabetics, it'll also be available to children, because currently the product's only approved for 18 years old and above. It opens up a lot of doors for people with children with type 1 diabetes, and eventually type 2 diabetes as well. There's nothing wrong with this company. There's no reason for it to be trading at this level. And now that they've finally had their first piece of like truly, truly good news, that they've gotten their FDA approval, the fact that it had a rug pull instantaneously after that, the RSI went from like 75 all the way down to 35 instantly in a single trading day. What the hell kind of sense does that make? How does that not scream a manipulative rug pull on retail? So what I'm trying to get at here is that IWM being sideways like this during this whole period and then selling off is actually something for us to really pay close attention to, because the IWM has a great deal of weight in the stock market. People don't give it a lot of credit because it's all small cap companies, and people think, oh, those are risky plays. But the IWM is a good performer. That ETF moves, okay? And it's been consistently just ripping faces off ever since March of 2020. The COVID recovery was fantastic for it. And even before COVID, it was a mover. Like, it had consistently good gains. Like, it was performing along with the SPY. There was nothing wrong with this ETF. And I'm just kind of throwing out my tinfoil hat theory, but this is what I think is happening, and this is the point that I have been trying to get to the whole time. What I think is going on is that there are many stocks that are a part of the IWM that were naked shorted, okay? And there have been hedge funds, market makers, and broker dealers that have a lot to lose if this were to get out. The hedge funds themselves are not necessarily as responsible, because a lot of them don't know when they're naked short. It's really the broker dealers that know when they're giving out a short that they know can't be delivered. And if they're lending those out, then the broker dealer stands to lose a lot of money in the form of fines and monetary penalties, and also being restricted on trading by the SEC, if the SEC was doing its fucking job. But we won't talk about that right now. What we're focused on here is the fact that all of these big entities have a lot to lose if ever they are forced to deliver on all of those stocks that they naked shorted. that they lent out without finding a borrower, that they pulled out of this ethereal inventory that doesn't exist. And if that were to ever come to light, then they would lose all of their business, because at this point there are more than 3 trillion settlements that have failed in the stock market since the 1990s. I'm sorry. I'm sorry. I said million, didn't I? I'm sorry. It was over 3 trillion failed trading settlements in the market from 1990 to date. If all of those stocks, if all of those shares were to be forced to be delivered, for all those companies that are still alive, by the way, all the companies that were naked shorted back in the 90s into oblivion really don't exist anymore, like Toys R Us or Virogen. I'm sure I could pull up a list of others, but I can't pull them up off of the top of my head. Even just recently, with GameStop and AMC and Senseonics and Progenity and BBIG, these are just a small number of the stocks that have been naked shorted into oblivion. And so many of them are tied to the IWM because they're all small cap. They have a small float. They're easily moved around, especially by just a few $1 million. I'll quote Jim Cramer. It doesn't take much money, just a few $1 million, and you can move the futures. You can absolutely do that with a few $1 million in the mid cap and small cap stocks. A few $1 million can make all the difference in the price, and you can sell a story that things are doing poorly. And the thing is that when a stock that you're short on goes bankrupt, you never have to deliver because it goes worthless and the company ceases to exist. And funny enough, there's no tax on that. It's a bit of a loophole in the capital gains tax system that when a company you're short on goes bankrupt and they are delisted from the exchanges, there's no longer a stock to buy, so you never have to deliver. There's no borrower to return it to. Their stock is worthless, and you are free of your obligation at that point, but it still stays on the books. So technically, you have a trade that never settles from a person you never borrowed it from, and the company no longer exists, so there's no shares to buy. So you just keep the money that you got when you sold the shares short, and there's no tax. It's a great scam, a giant loophole of tax evasion on such a magnificent scale that it should have been screaming in the IRS and the SEC's face, and it probably has, because we've been talking about it since 1995, okay? People have been talking about this since 1995. We've known about this for some time. But it still has yet to be addressed, and the IWM is the most obvious case where the stocks that individually move and cause a surge in the IWM's price get smashed down as quickly as possible and suppressed. But here's the thing, is that cannot happen indefinitely. And here's the reason why. The IWM continues to perform. This company continues to make this ETF, I should say, continues to gain steam and momentum, and it is a performer. If you go back far enough, you will easily see that the IWM is only ever growing. It's only ever growing. So with the IWM moving this much, and if you were a hedge fund or a market maker or a broker dealer that had a lot to lose if the IWM were to exceed this glass ceiling of $230 per share, then you would do anything to stop that from happening, wouldn't you? So this is my theory. My theory is that the IWM moves on all these individual stocks. And if there are enough of these stocks that were to, every time one of these stocks pops and it slams, it just slams in a positive way the IWM price up past its previous ceiling. In order to stop the IWM's momentum, somebody has to do something in order to protect that interest of that entity that has so much to lose. Ergo, they short that company and they slam the price down and they cause a huge sell off. Every time they do that, another company pops up a few weeks later and starts gaining steam again. And this is all because of retail. This is all thanks to retail. See, they've been doing this for decades and they've known that it works. And it's worked for them because nobody was ever paying attention. But ever since January 2021, and in fact, ever since Roaring Kitty really started getting traction on Reddit as of June 2019, or June 2020, he started building a community of people without his own knowledge or even really just without even really trying. He was creating an entire generation of investors that were informed and had their eyes open, seeing what was happening here in the markets and seeing how the naked shorting was being used to slam companies that were being forced to be doomed to failure because there was so much money betting against it that the stock price never had a chance, and they were going to use any means necessary to ensure the failure of these companies. But the thing is that as soon as retail started paying attention and they focused on just one stock, just one, GameStop smashed through its ceiling and it pushed the price to absolutely incredible levels. And because it did this, it pushed the IWM and other ETFs that it was a part of to such magnificent heights that it pulled up everything with it. And the thing is that everybody's been focused on GameStop and AMC, but those aren't the only ways that you can force a squeeze like this. And the thing is that these guys have been playing whack-a-mole with every one of these tickers ever since this started. GME was the first, AMC was the second, but now we have Progenity, we have BBIG, we have all of these stocks that are just crushing all expectations and moving against logic because there's a massive interest in the markets to see them fail, and they refuse to. And these guys that have billions and billions and billions of dollars generated through fraud are targeting all these stocks that are tied to the IWM. What if all of those heavily weighted stocks with a share price less than $1 were to move by just $1 in share price? What that would do to the IWM. And remember what I said when the IWM moves, all the others follow it. This is my theory that the glass ceiling can be shattered. That if enough small cap stocks with heavy weights and small share prices and micro floats are pushed high enough in their share price, that the IWM will move with that. And if the IWM moves too far too fast past this ceiling of $230, that it will pull all the other ones with it. And if that were to happen in enough volume, if a tidal wave of 3, 4, 5 different tickers that started this month at 20 cents were to move back up to $1 each, you're talking about stocks that hold a weight that if they were to multiply by 100%, would carry a weight greater than AMC and GME combined. And I want to explore this theory with you just by looking at this Excel sheet for a little bit longer. Please bear with me. Please think about what this would mean for these stocks. I'm going to create 2 more columns. Okay. Bear with me here for just a little bit. let's just make this $1. Okay. I'm going to set this. This is the market cap. This G2. So we're looking at shares multiplied by their share price, which is H2 plus I2. And this would be the estimated market cap. Okay. So if we added, what we're doing is we're taking the share price. Oh, sorry. I did that formula wrong. One second. So H2 plus I2. There we go. So this one's skewed because this is the dollar. So if the dollar gained a dollar value, it would double its market cap. Okay, that's just an example of what we're talking about. Okay. So we're going down the line, right? And we're estimating the market cap. All right. We'll go ahead and drag this down. Bear with me. I know that this is boring. This is Excel, but trust me, you're going to like this. So what we're doing, just a reminder, we're taking the estimated market cap, which is share price multiplied by shares. That's the market cap. We'll go ahead and fix this for all of these other stocks. See, H2 times G2. We're just going to fix all these market caps. Thank you for hanging out here with me, guys. Okay. So you see this. The market cap of these stocks is, or in this case, we're looking at, this is the US dollar. So if the market cap of the US dollar, based on what's in the Russell 200, if we added $1 to the share price, then we would multiply, the current market cap would be share price multiplied by shares. The estimated market cap would be the share price plus the $1 multiplied by the shares. We would get the estimated market cap. Okay, so I hope that that's clear. Now, let's look at the largest market cap. If we were to add just $1 to each of these stocks, what would be the ones that could make the biggest move? AMC moves $1. Then the market cap goes up to 216. But if we go down a little bit further and we see things like, let's see. Did I do this formula right? I feel like I did not do this formula right. See, H2 plus $1 multiplied by the shares. Okay, I did do that formula right. How about we do it like this? Let's go ahead and balance it by shares again. All right, GSAT. Here we go. So this is the kind of thing that I'm talking about. So GSAT, their current share price is at 95 or 96 cents, right? If you were to multiply that by 100%, if it had a 100% gainer day, that's an increase of share price by $1. The market cap would more than double. And that would actually add to the weight of that would actually increase its weight also by double. The weight of this stock in the IWM would go from 0.02 all the way to 0.04. It would double the weight. If we were to look at Ideanomics, this is a company that I invested in quite a bit, actually. This is an EV play. They're trading at about $1. Their market cap is 10 million. If they were to add $1 to their share price, then the market cap would double. and that would be added into the value of the IWM. And all of these other stocks. Let's look at our friend Tonix Pharmaceuticals Holdings. If they were to add $1, they're currently trading at 20 cents. If their price were to go up, this would be a 500% gain, by the way. The market cap would go from just under 2 million all the way up to $11.4 million in their market cap, and that value would be added to the IWM. And like, you could go on down the line with all of these different types of stocks. The ones with the largest share price obviously have a significant weight, but the ones with the smallest share price, these are the growers that have yet to actually throw their weight into the company. And if you were to say go down the line of these stocks and you were to increase their value by $1 each, you would see you could see the IWM's value continue to grow on a near exponential level, just because of how many shares this are that were put into this bucket of stock, this ETF bucket, with such a small share price. And it's currently dragging down, or rather just not doing anything for the IWM. But imagine a situation where all of these stocks started to squeeze together. Remember what my theory being that every time something like that happens with each stock, some hedge fund, some market maker, some asshole comes over and just plays whack-a-mole, hits it in the head with a few million short shares, and then slams the price back to where it was and say, stay in your place. You know, the nail that sticks up gets hammered down. Well, what if we just shook the board so much that we had 20 nails all sticking up and we just caused this whole house of cards to come crashing down? That's just one idea that I am kind of playing with right now. Okay, and I'm not endorsing any of these stocks. I'm not saying that people should buy any of these, but I'm just like throwing out my tinfoil hat theory that if there's somebody that's so invested in seeing all these different types of stocks that are part of the IWM fail, and the only thing that's holding these stocks back is the fact that the IWM can't crack above that ceiling, then what would happen if we saw all of these share prices double or triple in value just across just the smallest ones? And most of these are micro float stocks. It wouldn't actually take much money. It's just a theory. So thank you guys for sitting with me and enduring my my little spiel here. There's a lot of there's a lot of theory to play with here. There's a lot of speculation in these statements, but I just can't help but notice some familiar faces as we go through all of these lists of tickers between GNUS and GSAT and IDEX and trying to think. HOFV. I didn't even know that Hall of Fame Resort Entertainment was a part of the IWM, but there it is. Outlook Therapeutics I've seen before. MMAT, there's another familiar face. Isn't that interesting? Trading at just under $2. And notice that MMAT, as soon as it challenged and pushed the IWM up, it also got slammed down. What was MMAT trading at one point? Above $12, wasn't it? There's some interesting coincidences here. I'm just saying. There's some really interesting coincidences. Now, what I'm going to do with the help of the Hell's Trading Floor analysts is we're going to start compiling some more data and continuing to analyze this situation. But I feel like there's some really good weight to this argument that we're making here, that the IWM has really become a I don't want to say an anchor around AMC, because when the IWM moves, so does AMC. And it's true for any of the other stocks that are a part of it. But the thing is that every time something gets moving, one of our personal favorite stocks, something that's just doing a fantastic job, and we've got all of our memes targeting just this one particular stock, it becomes easy to manipulate just that one stock. These guys have so much money to pour into this. If we had the opposite scenario where we started targeting things that were going to, if we were to pick stocks that were new favorites, then it might actually put some pressure on it. I don't know. Well, now that we're getting spam, I think that's about it for me. I'm gonna go ahead and close the stream here, and I'll play an ad for the end of the day. You don't have to feel like you need to watch it, but I'll appreciate it if you do. It helps out Hell's Trading Floor just a little bit. Thank you guys so much for tuning in for this stream, and I'll see you guys next time.